And this is Bloomberg Technology. Coming up, Facebook nears 2 billion monthly active users, but could an ad slowdown be looming? We'll hear from Facebook COO Sheryl Sandberg on the social network's earnings report ahead. Plus, Tesla bulls can breathe easy for another quarter as the company confirmed its highly anticipated Model 3 mass market sedan is on track to begin production on time. And our extended interview with Silicon Valley veteran Chamath Palihapitiya. The social capital founders take on everything from President Trump to advice for embattled Uber CEO Travis Kalanick. First, to our lead. Facebook shares are down after reporting earnings that missed expectations, but revenue that topped estimates. The biggest tech companies keep getting bigger, though, and Facebook is no exception. The social network now has 1.94 billion monthly active users, up from 1.8 billion last quarter. And at this rate, Facebook could hit 2 billion total users by next quarter. Another big contributor to overall revenue is mobile advertising. Mobile ads accounted for 85% of ad revenue, thanks in part to Instagram's rapid growth. Yet the company warns that revenue could slow down this year. Revenue growth could slow down this year because they are running out of space to put ads in the core app. I just spoke to COO Sheryl Sandberg, who had this to say about ad load.
We carefully track the impact of ads on the user experience. We've been doing that for the last several years. We've said that ad load is up from a few years ago, and we've been able to do this by improving the quality and the relevance of the ads. Where we are focused is continuing to improve that ad quality and relevance.
Joining us now from Seattle, eMarketer principal analyst Debra Williamson, who specializes in social media marketing and the demographics of social media users. So, Debra, your first take on the numbers and especially what's going on with ads.
Those are just incredible numbers. I mean, every quarter, it seems like Facebook has another quote-unquote great quarter, and it's kind of hard to see where there might be problems. The revenue number looks great. The user number looks great. There's a lot of momentum at Facebook. But by the same token, you just mentioned Sheryl Sandberg's comments about ad load. We've heard about this for some time, and I think what it's really starting to show is that Facebook is looking for its Act 2 when it comes to revenue. The news feed has been its main source of revenue for 5 years, and now it's looking for other things. Instagram,
well, that next
video
act
ads.
Might be, right. That next act might be Instagram, which some people have called
True.
Facebook's next Facebook, 700 million users. Take a listen to what Sheryl Sandberg had to say about Instagram in particular and how much it's contributing now to the overall pie.
Instagram is, a very important mobile ad platform. Along with Facebook, we think the two most important mobile ad platforms, and we're seeing strong growth across both. I think the increasing visualization of ads is part of why ads on Instagram are so appealing. And the fact that you can buy ads through the Facebook ad system on Facebook, on Instagram, on Audience Network, use the same infrastructure, the same targeting, the same measurement, I think gives that platform a lot of ability to deliver results for marketers. I think it's early, but we're also seeing advertisers pretty excited about ads in stories, which has a really, again, heavy visualization and a nice ability to reach people.
That said, Debra, they still don't break out Instagram revenue, which also always makes you wonder, why not? I mean, how at what point does Instagram meaningfully contribute to this, to the point where they're willing to show us the numbers?
Well, I actually think it's already meaningfully contributing to Facebook's revenue. Our forecast this year is that Instagram will have $4 billion in ad revenue, and that's going to be over 1/10 of Facebook's total revenue if that number comes true. We have a number of $36 billion for Facebook ad revenue this year. So it's already a big contributor. So that's probably not the reason why they're not sharing the exact numbers. But I do think that Instagram is a really interesting platform for marketers. They're still really, really intrigued by it, and they still really want to learn more about how to reach that youth audience that's so prominent on Instagram.
Now, something else that they're experimenting with is different forms of video advertising, potentially mid-roll ads. Take a listen to what Sandberg had to say about that.
Right now, we're in the testing phases of ad breaks, and we're excited to be testing them. And it's going well so far, but it's early days, and we will see.
Mark Zuckerberg has famously been against pre-roll ads, but mid-roll ads, very much like a commercial on television. How optimistic are you about that, Debra, as a future source of revenue?
Well, you know, mid-roll ads and pre-roll ads, for that matter, have been really successful for other platforms like YouTube. So it makes a lot of sense for Facebook to get involved in mid-roll. I agree that pre-roll is maybe not the right format for Facebook, but I feel like as Facebook starts to roll out more video programming within its platform, including advertising within it, I think that advertisers are going to be very intrigued by it. Video advertising in general is growing enormously, and advertisers want to find new places to spend those dollars, and I think Facebook will probably benefit.
Now, there's been some concern about graphic violence on Facebook, Facebook Live, specifically about the rise in fake news. Facebook has announced a number of things to combat these issues, and Sheryl Sandberg told me that they haven't seen any meaningful impact on revenue from these problems. How big a risk factor, Debra, do you think those two things are?
I think they can be a risk factor. The advertisers that we've talked to in the past couple of months about issues like this, they haven't reported any change in the way that their ads are being responded to, or the engagement, or the return on investment for their advertising. So far these things haven't had an impact on the revenue, on the advertisers' ability to use Facebook. But you have to wonder over time if people's attitudes change, if they're happy using Facebook, if they're worried about using Facebook, if that causes them to be less engaged with Facebook. And so I think all of these things bear watching, but right now we're not seeing any evidence on the revenue side.
All right, and we'll be watching to see if they hit that 2 billion user mark next quarter. eMarketer Principal Analyst Debra Williamson, thanks so much for joining us. An update following Apple earnings results on Tuesday. Apple shares fell from record highs on flat iPhone sales, and revenue out of China dropped 14% in the quarter. Earlier on Bloomberg Television, Michael Olson, Piper Jaffray senior research analyst, spoke about the challenges Apple is facing in China.
China's in particular is a challenging one. China's tough because not only do you have higher awareness, as we do now in the U.S. as well, of the new iPhone coming, but you also have some significant localized competition with companies like Huawei and Apple that are creating great devices that can really compete from a features perspective.
Coming up, we are continuing our earnings coverage with Tesla reporting its first quarter results. While the company reported a bigger loss than expected, investors are encouraged about Model 3 production. Shares, though, dipping after hours. And if you like Bloomberg News, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. A story we're watching. Hedge fund manager David Einhorn is putting a target on Tesla, saying the markets are too optimistic about the company's prospects for expanding electric car sales. He also said stockholders put irrational faith in CEO Elon Musk.
For the time being, investors remain hypnotized by Tesla's CEO. We are skeptical that the company will be able to mass market its Model 3 at volumes and margins that justify the current valuation. The enthusiasm for Tesla and other bubble basket stocks is reminiscent of the March 2000 dot-com bubble.
But the bulls have reason to stay bullish with the latest earnings report. Tesla says initial production of its highly anticipated Model 3 is on track for July. Still, the company reported a bigger loss than expected in the first quarter. For more now, we're joined by Jamie Butters in Detroit, who covers Tesla for Bloomberg News. So, Jamie, what's the biggest surprise in this report? Anything to do with the Model 3?
Well, in the Model 3, I think, the bulls, the lovers of Tesla and fans of Elon Musk have a lot to be happy about with this is a company that so often has to delay product launches, and this time they're able to say, just 2 months or so away from job one, that they're on track. This is still going to go into production in July. They're going to get to 5,000 a week this year, 10,000 a week by next year. Suppliers are ready. A lot for them to be happy about and be excited about. But of course also some, it's not the most explicit sort of earnings report. And so the bears are kind of winning out now. The shares are down a little, some vagueness about the guidance on the S and the X and what the full year outlook is, and why the spending was not as heavy as had been anticipated, but a lot to chew on.
The Model 3 will be the first mass market car, and you wonder if owners of this car will be as forgiving as owners of the Model S or the Model X. In terms of quality expectations for the Model 3, how optimistic are you?
You know, I find that one really, it's paradoxical, right? Because you expect a $100,000 product, vehicle, or any other product to be much better than one that sells for a half or a third that amount. But I think, you know, there is this issue that that when somebody buys a Model 3, it might be their only car. Whereas somebody who's buying a Model S, you know, with ludicrous mode and it's $100,000+, they have other cars, or they can hire a ride easily enough. Whereas some, you know, 30-year-old who's barely able to buy a Model 3, you know, then if it's in the shop, they're really, you know, they're really left out of it. I don't know that they're going to be that much more judgmental, but they are going to be in deeper trouble if there are breakdowns, the kinds that have happened with other Tesla models.
Let's talk a little bit about Tesla compared to the other automakers. It's now the most valuable automaker by market cap. Are investors too optimistic about Tesla, just like what Einhorn said?
Well, you know, that's the beauty of the marketplace, right? They get to debate it out, and they do it with their dollars. So we still see about 20% of Tesla's float is shorted. So there are a lot of people who agree with Mr. Einhorn and think this company, and based on its fundamentals, it shouldn't be worth more than GM and Ford. But it's all on this possibility, what it could bring if the Model 3 is a success, and of course as it builds beyond that and becomes a truly global maker of electric vehicles, and if it can do so profitably. You know, selling the Model S and X, the gross profit margins are pretty darn good. But can you do that when you're selling $50,000 and $30,000 cars? That's the big test. And is there really going to be an ongoing multiple 100,000 unit, you know, market, even worldwide, even with China in the mix? Is there going to be enough demand year after year, decade after decade? That's the real test. But those who believe in it, they see, you know, this is like Henry Ford, you know, in 1915. If you could get in with him then, 30 or 40 years before the IPO, you totally would. And that's the way they see it with Musk.
Let's talk about cash burn. Is that a concern?
Always. Now, this quarter wasn't bad. They consumed about $600 million in cash, and they raised $1.2 billion. So the cash position is a little better than it was 3 months earlier. But they had warned, you know, Elon Musk had said they'd need to spend about $2 billion in CapEx to launch the Model 3, or before they started making the Model 3 in full production. They've only spent about $500 million, so that indicates maybe $1.5 billion of second quarter spending. That might be some of the overhangs that's causing some anxiety and pushing the stock price down a little after market.
Looking outward, Tesla obviously still has a lot to prove, but are the times just changing too fast for the likes of Ford and GM? Can they catch up?
Well, if you ask GM, they will tell you Tesla has to catch up to them because they already have a $30,000 to $40,000 electric vehicle out that gets 200 miles of range. But on image, they can't touch Tesla until Tesla completely implodes. Unless Tesla completely implodes, it's so hard to reach them. They're you know, they aspire to be, and right now their image is they're an electric Porsche. You know, these are super fast cars that handle really well, and they don't pollute. So there is an aura about them that, you know, an F-150 or a Corvette, you know, just can't touch.
All right, Jamie Butters from the heart of Motor City, our Bloomberg News autos reporter. Thanks so much. Well, in addition to Facebook earnings, the social network is stepping up its review of controversial videos like involving crime, involving suicide. This after recent murders in Cleveland and Thailand were both posted on the site. CEO Mark Zuckerberg said the company will hire an additional 3,000 workers on top of the 4,500 reviewers already employed. Facebook has been criticized for not doing enough to prevent these kinds of videos from spreading. I spoke to COO Sheryl Sandberg, who says the social network doesn't take fake news lightly, certainly not violence either. This is Bloomberg.
We haven't seen any impact on revenue, but we take all of these issues really seriously. We know people want accurate news on Facebook, and we've announced a number of steps, including disrupting the economic incentives, building new products to stop the spread of false news. We take this very seriously.
There's There's a serious bidding battle going on for Straight Path Communications. Verizon is said to have offered a $2.3 billion takeover proposal, giving AT&T 3 days to match the new offer. Losing Straight Path to Verizon would be a big blow to AT&T, which agreed to acquire the company for $1.6 billion just last month. Straight Path is one of the largest holders of spectrum approved for fifth-generation use. AT&T is eager to use those airwaves to build the nation's leading 5G network. Now to our continuing coverage from the annual Milken Institute Global Conference in Beverly Hills, California. Our Bloomberg editor-at-large Eric Schatzker caught up with Reddit co-founder Alexis Ohanian and asked him what's at stake for the innovation economy, given Trump's policy actions and signals.
We're an industry that leads the world, and that's a powerful thing. There are not a lot of industries in the world that America is so dominant in. And the reason we do that is in part because we've always had an industry and a country that's wanted to get the best and the brightest and given them chances to succeed here from anywhere. And also because we've had a level playing field for upstarts with a great idea sitting in their dorm room to be able to just simply make something without waiting for permission and just putting it to the world and beating incumbents by virtue of just making something better.
Well, I don't think anybody believes the administration is trying to stop anybody from doing anything in his dorm room. The other issue you raised implicitly, though, is immigration.
Well, and I think, and I would say net neutrality speaks to that other second issue, where it's imperative we have a level playing field, right? The upstart needs to be able to win because she makes something that's just better, and that the market chooses the winner and loser, not a big cable company.
So let's pick off these two issues separately, even though I can tell from your point of view they form part of the same, call it, problem. Let's begin with immigration.
Yes.
There's an effort underway. There's certainly talk of restricting the number of H-1B visas issued to companies in Silicon Valley. How would it affect Reddit, let's say, and how would it affect tech, the way you describe it more broadly?
Well, you know, frankly, the H-1B issue wouldn't affect us tremendously. We have over 200 employees, but that's not, H-1Bs are not a primary concern or issue for us. More broadly, though, what's so important is that we have amazing people who we want to bring here to help contribute to Reddit, to create value, provide for their families and all that. And they're now wondering, like, is this a country that I can stay in long term? And we've got our neighbors to the north, Canada, that I think are really taking advantage of this opportunity, taking advantage of the fact that you have a lot of really talented, proud Americans or people who aspire to be that, who are now thinking twice about whether or not America can really be the place for them to find their American dream. And we've succeeded.
You're worried about Canada stealing the march on the United States when it comes to innovation, technological development, and advances.
And frankly, one of the reasons why we've been so dominant as an industry globally is because people have known that this was the place where you could go and create something amazing, whether it's starting a company or joining one.
So for you, it's a matter of principle. It's not a practical issue.
It is primarily a principle one, and I think I wrote an open letter that I published on Reddit because Reddit would not exist if it weren't for the fact that my father's side of the family, who are all refugees, were able to find sanctuary here, and my mother, who was actually undocumented for a couple of years, was able to remain in this country. So it's a personal issue for me. And obviously Reddit affects a lot of people, and it's been a wonderful, wonderful experience that I may not have otherwise had. So I felt the need to speak up. But I think the principle here underlies the bigger issue, which is structurally, this country has always thrived because it's taken the best and the brightest in.
Let's talk about net neutrality.
Sure.
Why are you so concerned about it?
You know, it is...
Ajit Pai, as he says, blocking the FCC shot.
Yeah. It is so important. We've had a system in place right now that allows for this level playing field. And I think all of us as Americans want companies to succeed because the market says they should. What we're talking about now, what the FCC chairman is talking about, what he's proposing, is effectively going to let cable companies pick winners and losers. And that's just not, that's against the founding principles of how the open internet works. And it's going to mean a worse outcome for consumers. Like, I want better things, and I think most Americans do too.
You've heard this argument, so I have to put it to you.
Please.
What about other arenas, like search, for example, where Google picks winners and losers in its search algorithms.
What is so interesting about this is, at the end of the day, I can load up any search engine I want, right? And there are upstarts that get funded all the time right now that compete with Google. There isn't any difference between getting to a Google website today with net neutrality and getting to some upstart. What I don't want, and what will happen if we lose these net neutrality rules, is for one of our cable companies to decide that the default search package for your internet involves some competitor, involves Bing, because a deal was struck. And if you want Google search or you want some other search option, you have to pay more per month. I don't want my internet to look like my cable bill.
Reddit co-founder Alexis Ohanian there with our Bloomberg editor-at-large, Eric Schatzker. Coming up, we'll discuss President Trump and the inner workings of Facebook with Social Capital founder Chamath Palihapitiya next. And an update from the Facebook earnings call. Facebook CFO Dave Wehner says he's still expecting revenue growth to slow down, quote, meaningfully. They warned last quarter that this would happen. We'll continue to bring you all the highlights. This is Bloomberg. Technology, I'm Emily Chang. Let's get back now to our top story. Earnings season rolls through with Facebook and Tesla reporting results. The automaker confirming its highly anticipated Model 3 sedan is on track to begin production on time. CEO Elon Musk says the company is on track to support the ramp of Model 3 production to 5,000 vehicles a week at some point in 2017 and to 10,000 vehicles a week at some point next year. Yet Tesla shares are down after hours, the company reporting a bigger loss than expected in the first quarter. Now to Facebook. Shares continue to fall after reporting earnings that missed expectations, but revenue topped estimates. CEO Mark Zuckerberg gave a new number on the call: 175 million people using WhatsApp status on a daily basis. The status is the same idea as Snapchat Stories feature, which Facebook also ported to Instagram, Messenger, and its main Facebook app. Zuckerberg briefly touched on Instagram Stories, saying it's been doing well. Social Capital founder and CEO Chamath Palihapitiya knows a thing or two about tech and Facebook. The venture capitalist, former Facebook insider, is counted as one of Silicon Valley's most candid tech leaders. Earlier, we spoke with Chamath to get his take on some of the top tech headlines. I started by asking him about his concerns about President Trump's policies.
It's really not the policies, quite honestly, but it's the unintended consequences. And specifically, what I think is really scary is about what the long-term impacts to human capital are in the United States. So if I had to use a sports analogy, when your job is to win a championship, what you do is you try to draft and recruit from free agency the absolute single best players in every position you can, put them on the field or the court in order to win. Similarly, the United States, up until, frankly, quite recently, has been that equivalent for human capital. If you were very good or really good at anything, you want it to come here. And what's interesting is the early data is starting to show signals that that is changing. And I think that's bad. So that's irrespective of any ideology. We want the smartest, best people here working on behalf of Americans and America. And anything that impacts that, I think, has long-term negative consequences to GDP and value creation.
How's he impacting venture capital so far?
Well, so again, on the human capital side, I think what we're seeing is a lot of businesses that are frankly having a terrible difficulty recruiting people. And so what that means is wage inflation, which doesn't really add to anything because all that means is you're burning more money without necessarily incremental productivity. Number one. Two is you're starting to see competitive businesses now be created in increasing velocity outside of the United States, in Canada, in China, in India. That's generally bad if you think about businesses that could theoretically be built here where the value then is captured within the United States.
So you think the U.S. could lose its pedestal?
Oh, no, I think it's losing it. In fact, we saw a report today that said that MBA programs, and we can debate about the long-term value of MBA programs, but they've seen the most marked decline in applications from foreign applicants. Now, in the short term, that may be good, but in the long term, the reality is there are some free agents we should just be poaching from other countries and putting them on our team.
You spent a lot of time with Mark Zuckerberg in the early years navigating some rough times at Facebook as the company matured, as Zuckerberg matured. Do you see any parallels with what's going on with Uber and Travis Kalanick?
It's hard to know because I'm not in the situation in the boiler room at Uber. But here's what I'll tell you about Facebook, which was that in those moments where we push certain boundaries, say, for example, in the way that we build and design certain products, or how we were exploring the consequences and the reach of privacy, and we had our hands slapped or we learned things, what we did was internalize the cost benefit and the trade-off of the potential of what we wanted to build and the impact of that to humanity versus taking a more methodical approach. And since then, I have to say, Facebook has been basically flawless. And I think the opportunity for them to realize is that their ego is not nearly as important as their impact. And the minute that you make that transition, there's just a different caliber of individual, particularly at the very senior ranks, that you can attract that will want to work with you on those kinds of problems. And it seems, at least from the outside, that there's a lot of early signals that that transition is happening. So I hope that it's working because the human potential impact of Uber is undeniable.
So what are your recommendations to Travis specifically? In your position outside the boiler room as an observer?
Well, I think that when you are in a company that is that iconic and unique, the biggest thing you have to do is become a lot more introspective and become what I call inside-out validated. So, when stars and famous people and rich people and CEOs call you and want to spend time with you and take you out and invite you to things, all this external validation that tells you you're important, you have to ignore it. And in fact, you have to run away from it. And you have to spend time with your engineers in the boiler room of making the product every day. And when you strip yourself of that outside validation, you learn to validate yourself inside out. And I'm not saying that he hasn't done that, but what I will tell you is if you can make that transition, you become an extremely powerful CEO, and I think Mark is a great example of what that looks like.
My colleague Brad Stone wrote a book comparing Uber to Airbnb. I'll put the question to you like this: Uber or Airbnb?
I think if you had to pick a more natural monopoly that had pricing power at scale, I think it's Airbnb. The reality with Uber is that it is a fundamental consumer surplus business where there is still risk that the entire business model is about cost of capital, meaning that in a world of autonomy, what you have is the ability for new entrants with huge balance sheets, Google, Apple, Facebook, companies that you never would have imagined competing with you could, because it is just a function of having enough money to buy enough autonomous cars because you already have the customer reach, and you can then model the demand well. So in a market like that, there's potentially value erosion over time because you have more players, not less. Now, in the case of Airbnb, what they really have to navigate is cost-effective customer acquisition at scale. So instead of having many problems and many potential competitors, Airbnb has to solve an internal capability issue. And if they solve that, then that is probably the next massive company to come out of Silicon Valley.
You're really bullish on Amazon, though you also spent a lot of time at Facebook. Amazon or Facebook?
So, the thing that I think about is you have to fundamentally be in the largest, most unconstrained market possible. And when you look at the world and where dollars are spent, advertising in and of itself is a $200 billion plus market. It's created now $1.1 trillion of value between Facebook and Google. It's incredible.
But Facebook is running out of space to put its ads.
But at the end of the day, the thing that is fundamentally unconstrained is consumption by consumers. Wherever there are people who are making more money than they spend, they will find a way to allocate whatever's left over to buying things. And to the extent that buying things is the most important part of GDP, which it is in America, and it tends to be in most developed nations, the company that dominates in selling you things you want to buy will probably be the largest company in the world, and probably by many orders of multiples than anything else. And so, I'd have to pick Amazon.
And you have historically been fairly pessimistic about Apple. Where are you today?
We don't hold it. I look at it as a really interesting value stock. I don't view it as a company that represents for me what I want to own, which is, basically innovating on the future in ways that represent change. And at the end of the day, I also think a balance sheet that distributes cash back to investors is essentially saying, we believe you know what to do better than we know what to do. And so I think all of that speaks for itself.
That was Social Capital founder and CEO Chamath Palihapitiya. Well, the feud between Qualcomm and Apple is hitting new heights. Qualcomm now plans to retaliate by asking a U.S. trade agency to ban imports of iPhones. Qualcomm is preparing to ask the International Trade Commission to stop the iPhone, which is built in Asia, from entering the country. It's threatening to block Apple's iconic product from the American market in advance of its anticipated new model this fall. This all according to a person familiar with the company's strategy. Apple argues the system is unfair and stopped paying licensing fees to Qualcomm last month. Coming up, another courtroom showdown, this time between Alphabet's Waymo, the self-driving car unit, and Uber. We'll bring you the latest court ruling that has Uber's driverless car ambitions hanging in the balance. And we continue to monitor earnings. Facebook continuing to decline in after-hours trading. Anything of that magnitude in regular trading on Thursday would be the biggest slide for Facebook shares since the start of November. And the Tesla earnings call has begun. CEO Elon Musk saying the company's electric truck will defy expectations of what a truck can do. We'll continue to monitor both calls. This is Bloomberg. Court is in session for Alphabet's car unit Waymo and Uber. At stake, Uber's driverless car ambitions. A judge will weigh in on Alphabet's request to freeze Uber's self-driving car efforts until a jury issues a verdict in this case. It's the latest phase of a courtroom battle over trade secrets that threatens to topple a central pillar of Uber's growth strategy. Joining me now here in the studio, Bloomberg tech reporter Eric Newcomer, who covers Uber. So, the session is closed to the press, but what do we know so far about what's happening in there?
The judges said he hasn't found the smoking gun in the case, but Alphabet and Waymo, their self-driving car company's case here is very strong. He seems to be very convinced that Anthony Lewandowski, the head of Uber's now self-driving, or the former head, he's been slightly demoted, but the once head of Uber's self-driving car program, took these 14,000 files. What he's not clear on is whether Uber ever used them in a meaningful way, and that's essential for the trade secrets case. So on the one hand, pretty convinced he took them, but then if they didn't use them, that might not matter.
Why wouldn't it matter, though?
Because this suit is against Uber. It's not sort of it's not a criminal question about Lewandowski. He's not he's not sort of the subject of this suit. So it's about whether Uber benefited from that alleged theft, and that's really the question in this case.
If Uber is forced to freeze its self-driving car efforts right now, how crippling would that be?
Definitely really bad for recruiting, bad for sort of this forward-looking vision. Uber, the sort of innovative technology company. And then there's just also sort of a timeline first to market, sort of there's this perception that there's advantage. On the other hand, Uber's still sort of trying to make its human driver business work. I think that the human driver business will be what powers Uber at an eventual IPO, and this self-driving car program is still far off. So it's fighting for its future identity, not really its identity in the next couple of years as it figures out exactly how the human driver business works.
Do we know anything about how the suit has impacted Uber's self-driving car unit so far? I mean, we know Anthony Lewandowski was slightly demoted, as you say, but is this impacting employees?
I think we're still watching. I mean, it was definitely coming up at all hands meetings within the advanced technologies group. People are asking, why is he still here? So I think people are asking questions and certainly watching it, but whether it sort of results in mass turnover, I don't think we've seen yet.
And to be clear, he co-founded the self-driving truck startup, Auto, which Uber bought.
Right.
Talk to me a little bit about the history of this judge, because he's also weighed in on other cases involving Google, involving Oracle.
Right. He's sort of the guy in deciding these technical sort of big company versus big tech company fights, known for really studying up, getting in the weeds. He requested his name's Judge Alsup, and he requested sort of all this information on LiDAR, how it works, and he even had this note, I know this one technology, so make sure it's above this level. So he really tries to understand what these different technologies are, because he has to be able to sort out whether Uber did take anything meaningful from Waymo's LiDAR technology.
And Uber is trying very hard to keep this case from ever getting to a jury. What is the likelihood of that?
Right, so we still have this question of whether there's arbitration. Basically, Anthony Lewandowski agreed to arbitrate with Google, and if that would be the case, then everything would be kept quiet. And as you said, there is already a hearing right now that's closed to the press. So there's this question from the judge, if you guys want to hide everything, why do you really want to air this in public? Resolve in arbitration. And so that decision still needs to be made, and we don't know exactly what will happen.
Uber's had a lot going on while I've been on maternity leave. You've been very busy. I'm curious, have you found that all of the things, one after another, whether it's the sexual harassment case involving Susan Fowler, whether it's Amit Singhal, sexual harassment allegations, how is this impacting the company's brand?
Well, its brand's taken a serious hit. I think delete Uber, sort of the reaction to Trump was the biggest in terms of user backlash and sort of colored everything else. Employees have been very upset about the Susan Fowler case. And right now it's sort of a holding pattern. We're waiting for the former U.S. Attorney General, Eric Holder, to come out with this report.
Happening in May.
End of this month, hopefully. And so I think Uber's been able to sort of fend off critics and employees saying, okay, we have this report coming, we're going to address all these big issues. And then at the same time, they're looking for a COO. If they fail on either front to deliver sort of meaningful change, I think we're going to see this open up again. Right now, we're sort of in a waiting for this court case, waiting for the CEO, waiting for Holder. We're waiting to see right now how Uber can recover.
All right, Eric Newcomer, our Bloomberg tech reporter who covers Uber. Thanks so much. Coming up, we will continue our coverage of tech earnings. Square and Fitbit both jumping after hours. We'll dig into the numbers next. And that Facebook earnings call is still underway. The company has been under scrutiny about Facebook Live after a number of high-profile suicides, murders, and shootings were broadcast live. Zuckerberg was asked what the social network would do to help issue. He replied, the holy grail would be that having AI that can stop violent videos as they appear, but the tech is nowhere near able to do that, so they're hiring thousands of new people to personally vet these videos. This is Bloomberg. The New York Times says the first quarter was its best ever for subscriber growth. The paper says it added a net 308,000 digital subscriptions, continuing its momentum from the previous quarter, which fell during the U.S. election. The Times strategy focuses partly on reaching younger readers through new partnerships with online services like Spotify, or its recent decision to join Snapchat's Discover platform. Square, meantime, is on a roll. The company run by Twitter's Jack Dorsey is proving that it's not just a niche payments player. Revenue in the first quarter shot past forecasts, rising 39%. Square also raised its sales and profit forecast for the year. Joining us now for more from New York, our Bloomberg tech reporter, Selena Wang. Selena, first of all, what do you have to say about Square blowing it out of the water?
This was a hugely important quarter for them. As you said, they completely blew earnings and revenue out of the water. A lot of this has to do with answering that big investor question, is just this a low margin niche payments processor for micro merchants? And I think the past few quarters have emphatically answered that no, this is not just a niche payments processor. It's something that provides a full suite of business services for small and medium-sized businesses. Now, these newer products that Square has started, such as loans, inventory, invoices, food delivery, have all proven to be very fast growing, to have higher profitability, higher margins. And Square has really shown this quarter that it can continue to invest in growth while growing at scale and continuing to improve profitability.
You just had a call with Square CFO Sarah Friar. I'm going to be speaking with her tomorrow on television. What did she have to say?
Sarah gave some really interesting color on how they're able to beat competition, how they're able to go up market. One of the big questions is what value add do they bring to larger merchants? And they've shown that they're able to not only maintain their take rate and get those larger merchants, but actually cross-sell a lot of their products to them. The CFO actually seemed pretty surprised herself at how much their message really resonated with them. The larger merchants also care about having the newest technology and being able to quickly get their invoices and also to be able to analyze sales, and they really appreciate the full suite of products they offer.
Fitbit shares also soaring after hours. What about the turnaround, Selena, seems to be working?
I wouldn't say the turnaround is working quite yet. This is a very volatile stock, and they beat earnings on very low expectations. Sales dropped a whopping 41%. That is a very large amount. It just happens to be less than investors were expecting. They face a lot of structural headwinds, such as a shrinking fitness tracker market, as well as competition. The Apple Watch continues to get better and better with more fitness features, and we also don't see any competition from these cheaper makers in China letting up anytime soon. So yes, this was better than expected, but better than bad expectations.
Apple CEO Tim Cook talked about how the wearable market is such a challenging market, and it's no surprise we've seen players drop out, like Pebble, for example. Talk to us a little bit about the long-term trajectory for Fitbit.
Emily, you're totally right. Even the leader in hardware is saying that wearables is a very difficult space to be in. James Park has said over and over again, the CEO of Fitbit, that his goal is to make wearables a must-have, not a nice-to-have. And we've seen them start to move into that direction with their newest upgrades. They've started to add better analytics, better sleep tracking metrics to get people to actually feel like it's useful to use these devices, not just fun to be able to track how many steps you walked. They are slated to roll out a smartwatch later this year, as well as maybe some other products. There's been reports that they may come out with Bluetooth headphones. And the bright spot for Fitbit here is that though they do have slowing growth, they do still have a massive installed base of users, and a big proportion of them are in fact loyal. So they will probably be likely folks to move on to the smartwatch and purchase those upgraded products.
All right, our Bloomberg Tech reporter, Selena Wang, thanks so much for joining us there on Square and Fitbit. And that does it for this edition of Bloomberg Technology. Remember, we are live streaming on Twitter, of course. Check us out at Bloomberg Tech TV weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.